What the pants, man? I got all this SUSD and I don't even know what to do. I know what I can do. Stop in the name of SUSD. What are you doing? What's it look like I'm doing? All right, real talk, man. Put it down. This SUSD, it ain't trash. It's worth a lot of cash. There is a ton of utility with it. In fact, in today's video, guys, I'm going to show you how versatile SUSD is. In some cases, it's actually more versatile than stablecoins like USDT and USDC. If you guys are sitting on a stack of SUSD, you're going to want to see this video on the different protocols you guys can use. Also, there will be timestamps in the description below. That way you guys can navigate through the video without having to watch stuff you already know about. So if you want to use those timestamps, they're in the description below. Before we show you guys the different protocols you guys can use with your SUSD, let's go ahead and show you guys how to mint some. This is on the Synthetix platform. I'm on Optimism. I'm going to go ahead and hit mint max. I'm just going to mint max just so I can get some SUSD in order to show you guys how to use it in this tutorial. Hit confirm, and within seconds, I will get the SUSD. This is on Optimism Network. So I got some SUSD now. Let's go ahead and show you guys the very first protocol. First, let's start with AAVE. If you are a DeFi degen, you look at AAVE and you're like, dude, that's just sliced bread. Give me some sauce. Don't worry, stay till the end of the video and I'll show you some other stuff. If you guys are new to DeFi, the TLDR on AAVE is it's a borrowing and lending platform. You put up collateral and you can borrow assets against it. In particular, SUSD is actually paying a 9% supply APY with a 2.36% incentivization from Optimism. So you're getting bonus tokens. This has a 60% maximum loan to value. This means that if I give out $100, the most I can borrow is $60. And my liquidation threshold is at 75. What this means is my position will be liquidated if my debt value is at 75% instead of the 60% loan to value. AAVE seems a little bit simple, but one of my favorite strategies is arbitraging the yields. One of the ways you can arbitrage is by lending out your SUSD and borrow any of these other stablecoins. The reason why I say borrow the stablecoin, because right now we're actually going to arbitrage the yields. What do I mean by this? Well, if I'm lending out SUSD and they're basically paying me 11% in order to supply the asset, if I borrow USDC, I'm only going to pay about 4% to borrow it. So I'm actually still making 6% on my yield, and now I have this additional USDC to do whatever I want with it. What I can do is I can go look for other protocols and look for ones like Taro, or I can LP on Curve, or I can even go to Velodrome, which we'll talk about later in this video, and just get some saucy rewards. This will make more sense. Just stay tuned to the video and you'll understand what I'm talking about. Arbitraging the yields will allow you to make more money on those monies that you don't have. What does this mean? Well, think of this. If you had $10,000 and you were earning 5% APY, and then $1 million and you were earning 1% APY, which is going to earn you more money at the end of the year? Well, the $10,000 at a 5% yield in 1 year will earn you $500. However, the $1 million at a 1% yield would earn you $10,000. I know that's an extreme example. The point I'm trying to make is that using these strategies are not as simple as, hey, I got $10,000, 5% yield here, 5% yield there. A yield is not always the same as another yield, especially if you can leverage something like AAVE and use it to loop. If you want to see some of the other videos on looping, I've done several videos on them, but we got a bunch more protocols to talk about. So let's go and get into the next one. It's called Curve Finance. In fact, they have several different pools you can use for your SUSD, as well as some other synthetic assets. In particular, as you can see here, you can lend out your SUSD on the ETH main pool. This is also on Optimism as well, but the SUSD pool is paying around 5%. This is including SNX rewards, swap fees, as well as curve fees. If you got some ETH, you can actually earn about a 4% yield. Sometimes this is as high as 15 to 20% on some ETH. And theoretically, it's kind of single-sided at the ratios it's trading at. In fact, SETH trades at a premium to ETH. So if you had 10 SETH, you'd be able to swap it and get 10.05 ETH. And the reason why it has this premium right now is because there is a lot of demand in order to get this yield. Curve is pretty self-explanatory, but what you can do is you can take your SUSD that you minted, you can get other cents with it, and you can LP with them on Curve, and you can also LP with your SUSD on Curve. The next protocol I want to show you is Dhedge. You can basically look at this like a social trading platform. What does a social trading platform mean? Well, the TLDR on it is it's almost like copy trading. Let's say, for example, I started my own vault on Dhedge. I would say, hey, look, this is my strategy. This is what I'm doing. I would deploy it on the Dhedge marketplace. And if anyone wants to copy what I'm doing, they can deposit into the vaults. So what you would do is you'd look at these different vaults. In particular, let's go ahead and show you guys the debt vault for Synthetix. This is in order to manage your debt on Synthetix. If you guys wanted to get some DSNX, you can actually swap some SUSD for this, and it will give you an equivalent portion of DSNX at that time. If you don't understand what I'm talking about hedging your debt with Synthetix, we just made a previous video on how to hedge your debt. You can check out that full video and it gives a full explanation why. But the TLDR is in Synthetix. When you're staking your SNX, you aren't actually staking it. You are actually opening up a debt position and you need to manage that debt. So if you are staking your SNX right now, or if you're looking to stake it, I highly recommend you guys check out that video. So DSNX is not the only strategy on the Dhedge platform. There are multiple different vaults you guys can jump into. On Optimism, there are a couple of them. As you can see here, there's 6 different ones. So if you want to select a different one, all you do is hit view, and then you would go ahead and deposit the amount you want to deposit, and it will give you that token, and it will track and follow the portfolio that is allocated to this one. The next protocol you can use your SUSD for is Thales. As you can see on the main page, SUSD is leveraged as collateral for all of their smart contracts as well as their settlements. I know the question's ringing around in your head. What are pari-mutuel markets? Well, the TLDR on this is that instead of placing your bets and wagers with a bookkeeper, so a third party, you're actually placing your wagers against other bettors. So let's say, for example, I'm betting on the platform and someone else is betting against me. It's just me and him. We aren't placing our bets with a bookmaker. So it doesn't have to just be between 2 parties. In fact, it can be with multiple people. But anyone who is betting, throw all their wagers into a pool, and the pool is split equally between all of the people that win. Now, of course, as expected, the house does get some money, which in this case, it would be Thales. So this is the layout of what the protocol looks like. As you can see, you can say, hey, look, I'm betting ETH is going to go down to 1500. It will give you the strike price, the position price, as well as the time left for that certain category. They even have ones for AAVE, Optimism, ETH down, Perpetual, Lyra. These have different time frames. These all have different dates that they end on, as well as different strike prices. So make sure you guys scroll through and look for the ones that you want to choose. Once you find the one that you want, you select the position and you can say, hey, I want to buy or sell this position. It will allow you to use your SUSD as collateral in order to get into the position. And at any time when you're finished, you can always hit sell and then get your SUSD back. Now keep in mind how these work. As more people come to say, yeah, it's going up, or more people come in to say, nah, it's going down, the prices are going to fluctuate. So if everyone is saying, bro, it's going to go to 25K, well then that cost to stay on that side of the trade is not going to have as much upside, and it's also going to cost more. You have a better chance of winning. With $1 being like, yeah, look, Bitcoin is going to 25K, and usually whatever happens at that point in time, it'll either end at a 1 or a 0. The 0 would be like, nah, bro, it's not going to 25K. So it fluctuates in between this $0 to $1 price. So the benefit of this is that your downside is capped, but your upside is also capped. So this allows you to bet in the markets without, well, allowing the downside to be infinite. So this helps manage the risk to the downside by placing a cap on it. So something to keep in mind. Now, if you're a sports fan like me, you're going to love overtime. Overtime allows you to speculate on different games, on who is going to win or who is going to lose. You can use your SUSD as collateral for each of these positions. So let's go and show you guys the Texas Rangers and the Seattle Mariners as an example. Based on how these prices are showing up, it looks like more people are favoring the Seattle Mariners to win. The reason for this is because the price of the token is actually higher, which means the upside is less because the most you can get to is $1 for this token. At any given time after you purchase one of these tokens, you can go and sell the token. So with these tokens, the highest it can go is $1 and the lowest it can go is $0. You can also select different sports. You can do soccer, football, MMA, baseball. It's not just a specific sport. Now, if you aren't a sports fan or a trader, there is a random prediction market built on Thales. You can use your SUSD on exotic markets. Exotic markets allows anyone to create their own marketplace and say, hey, this will happen or this won't happen. And you can make bids on the different outcomes. Will Donald Trump run for president before November 8th, 2022? And if you want to make your prediction and say, nah, I don't think so, you can wager up and say, hey, I want to bid in 30 SUSD against this. Of course, you need to be aware of the bid fee, the withdrawal fees, as well as the time remaining in this market. Anyone is able to create their own market. All you got to do is hit create your own market, enter your question, the data source, the different positions, the ticket price, and then you put your deposit down because you have to put this forward. As you can see on this alert, there is a minimum bond of 100 SUSD. So make sure you guys look into the docs on this if you want to participate, but this is just another utility for your SUSD. Now the next protocol we want to talk about is Lyra Finance. This allows you to trade crypto options. Before digging in deeper on what options are, let's go and understand how the stock market works first. Tony's got some nice Jordans, and he knows someone's going to want his Jordans. He believes he can easily sell it for 150 bucks. Freddie sees those Jordans and he's like, man, those are pretty valuable. I'm pretty sure I can sell those for $300 in a month. I'm going to go ahead and buy them. So Freddie buys them for $150. A month later, he goes and sells the new Jordans for 300 bucks and he pockets the 150. This is how the stock market works. Buy low, sell high. Now this is how options work. Let's say, for example, I don't have the $150. I just got $50. And I don't want to be out $150. And I'm like, Tony, bro, let me slide you a fast one. I'll give you $50. Just hold the shoes for me. And whenever I ask for it, you'll sell it to me for $150 within the next month. At this point, I'm basically locking up the price by putting down that $50. You can consider this the deposit. So now's my chance. The NBA finals are in town and a bunch of ballers are wanting some Jordans. So I'm like, bro, I got some J's. They're worth $300 if you want to buy some. I locked up $50 with Tony, so I know he's holding them for me. So I find a guy, I got him. He's willing to pay $300 and I make the deal with him. I get $300 from the baller and then I pay $150 plus interest to Tony. I get my J's from him. I give them to the baller and now I just pocket the rest. So in theory, I basically just made $100. Why is that? Well, this is how you factor it in. I gave him $50. I gave him $150. I basically invested $200. The $50 was the cost of the option. But here's the cool part. Those shoes that were worth $150, let's say they went down to $20 after I put down this $50 deposit. Well, at the end of that month, Tony can come to me and say, bro, time's up. Time to buy your shoes for $150. I'm like, bro, these are worth $20. You keep your $50 and get out of my face. I only lost $50 in that option. Whereas if I bought the shoes, I would have lost $130 because $150 minus 20, that means I would have lost $130. But the option protected my downside because my lowest downside was $50. But my upside was uncapped. Let's say, for example, I found someone to buy those shoes for $1,000. Well, I would only be out the $150 to buy them from Tony and then my $50 option. That's how options work. With a better understanding of options, let's go and go over a couple of vocab terms you guys will need in order to understand Lyra Finance better. The first is a call option. The call option is the right but not the obligation to buy an asset at a specified price before a specified expiry date. So this means you have the option. You are not required to buy that asset when it becomes expired. The second is a put option. This is the right but not the obligation to sell an asset at a certain price before a certain date. Remember, these are options. So a call and a put option, they are not requiring you to buy it after those dates expire. So if my option is up in a month, I'm not required to buy that. I can just let my deposit expire, and that's it. The next is the strike price. This is the price which the put or the call option can be exercised. So if my strike price is $1,900 on ETH and ETH is trading at $2,000, well, I can exercise my strike price and get it at $1,900 if I wanted to. The contract expiry is the date that the contract expires. So if my contract date is August 31st, 2022, then that means, okay, my contract expires on August 31st. The option premium is the cost of the option contract. The premiums differ based on how close the option is to the actual price on the market. So if ETH is trading at 1900 and I have an option at 1800, that premium is going to trade for more. Because if I exercise my call option when it comes to the expiration date, well, I get it for $100 less. And the opposite is true. If ETH is trading at $1,900 and my call option is with ETH at a price of $2,500, the premium is going to be much less because it's not even close to the current market price. So let's say, for example, I want to go ahead and open a position on Lyra Finance. I want to go ahead and open a call on 1800 ETH. I'm pretty bullish ETH right now, and I think it's going to go up. The reason I'm selecting the one at 1800 is because it's much cheaper to get into this position. It's only going to cost me $20. Whereas if I did it around the $1,500 ETH price, I'm paying $185. Not so much sauce. I got to make sure this price goes banging if I'm going to take into that position. So if ETH went to $2,000, my option that I bought at $20 would be worth $184. So on a small $200 move on ETH, I would actually be up over a 9x. So this is the power of something like an option. Whereas if I did the 1500 one and it went up to $2,000, I wouldn't even double my money. So yes, it's a little more risky to buy a option that is in the 1800 range, but as you can see here, the potential for profit is much more, especially if ETH goes zooming. And you would use SUSD as collateral for this. Now the opposite is true. Let's say, for example, you're bearish ETH. In this situation, you would want to buy a put. So I'm going to go ahead and buy a put at $1,400. What this means is that I'm able to sell Ethereum at a certain price. In this case, it would be $1,400 by a certain date. And this date would be by September 30th. Now, ETH could be trading at $1,000. It could be trading at $800. But I bought this put, so I would be able to sell it at $1,400. I'm not required to exercise this option, but I do have the option to. And this put would only cost me $83. I would press buy put, and then I would confirm the transaction in my MetaMask in order to execute this transaction. So with this option, the scenarios that can happen is if Ethereum goes to $2,500 and I have a put at $1,400, well, I'm just going to go ahead and let it expire because, I mean, dude, I can sell it for $2,500 instead of $1,400. It was just a waste of $83 for me because that's what I paid. Now, let's say, for example, Ethereum starts trading at $1,000. Well, I have the right to trade it at $1,400. I'm going to exercise my option because, well, I get $400 over what the asking price is. That's kind of the TLDR on Lyra. Now, before we go and give you a futures platform, let's go ahead and talk about a simple one. This is Velodrome. Velodrome, if you have some synths or some SUSD or some SNX, you can simply just deposit it into any of these pools. Of course, they're 50-50, and that's it. You deposit them and you earn a yield, and it's going to be paid in Velo. So as you can see here, the Velo SUSD is going to pay you 138%. Or you have the Optimism SUSD, you're getting 57%. Keep in mind with these pools, there is such thing as impermanent loss. So you can use other things like a stable pool where it's going to pay 7%, another stable pool, which is 9%. And you even have the SETH pool, which is paying 8%. This will have little to no impermanent loss as long as the tokens are holding peg. Yes, there is a chance that stablecoins or even pegged assets can lose their peg. So make sure you guys understand the risks involved with this. And this is how you would add liquidity. You would hit add liquidity and you want to say, I want to go ahead and do 1 part SUSD and 1 part SNX. So you would select how much SUSD you want to do. Depending on the pool that you're depositing into, you want to select stable or volatile. In this case, it would be volatile, and then you would deposit and stake. It would make your LP token, and then it would stake it into the pool for you, and you can manage under the rewards tab. Now, the next one we want to talk about is futures/margin trading with Kwenta. Now, what is the difference between futures and options? Futures is different than options because the contract holder of the future is required to buy or sell the asset on that specific date. If you're the one holding that contract, you're forced to buy it. Whereas in Lyra Finance and the options platform, it is an option to buy it. So that's how you can remember it. Futures is I'm promising to buy this in the future, and an option is like I may buy it in the future, but I have the option to do so because you can let it expire. So Kwenta is pretty self-explanatory. If you wanted to open up a future, what you would do is deposit the amount of SUSD you want to deposit, and you would margin trade with this. So I'm going to go ahead and deposit my margin of SUSD. This will allow me to open up a position if I wanted to go long ETH or long Bitcoin, just depending on what I want to do. So as you can see here, I literally deposited $50 and they allow it to 25x. So I can trade up to $1,250. So I'm going to go ahead and do 25x leverage, and you know what? I'm going to use all my SUSD as collateral and go ahead and buy a position in ETH. I'm not actually going to confirm this because I'll probably get liquidated. I don't like to trade with leverage. I'm just showing you guys what you can do. So I can say, hey, I want a long or I want to go short in this position. What a 25x leverage would mean is that if the price of ETH moves up or down in a certain percentage, well, in this case, it would be about 4% because I'm 25x, I would get liquidated. My $50 is gone and I would have had a fun experience. So at any time you want to close out, you're finished margin trading, you want to get your collateral back, you say, hey, I'm going to go ahead and withdraw my margin, get that back, and you're done. Kwenta only works with SUSD as collateral, but you can do ETH, you can do Bitcoin, you can do Link, Sol, AVAX, AAVE, Uni, Matic, you can do gold, silver. There's several different tokens you guys can use on the Kwenta platform. You can go long, you can go short. So make sure you guys look into it and play around with the platform a bit so you can see what's up. Now the last protocol I want to go over is Polynomial. If you listen to this whole video and you're like, I don't know what to do on any of those positions, it's a bunch of jargon, I don't want to mess with it. But you can kind of look at these guys like the Yearn Finance of derivative protocols. It will automatically do the covered call and put strategies for you, and it will be automated. So if you go and expand one of the vaults, this is the Ethereum call selling vault. You can see here this strategy is best for when it's bearish / moderately bullish. This is not good for an extremely bullish market. The reason for this is it's a call selling strategy. You can see here in the vault, it says this vault uses the funds deposited and sells for out the money options with multiple expiration dates and strike prices. And anyone depositing into one of these vaults is able to close the position at any time. When you do this, it takes a little bit of time to process the withdrawal. It says within 2 to 3 hours. You can also track the performance of each of these vaults by clicking on performance and seeing how it's done over time. Right now, it is currently accepting deposits for more ETH, but if you want to wait on the sidelines and see how the vault performs, you can give it a week, 2 weeks, and see what it does. Now that was for SETH. You also have one for SUSD on the V2 model. Make sure you guys do some more research and look into the docs to see the different strategies, and you can also ask questions in their Discord. I hope you guys enjoyed that video, and now you know what to do with your SUSD. Don't be making a joint with it. You can browse around, play with all these different DeFi Legos, and make your own strategies. Let's go and hit you guys with a wisdom one-liner. Proverbs chapter 12, verses 9. Better to be a nobody and yet have a servant than pretend to be a somebody and have no food. That's almost like pretending to be full but being hungry. I would much rather be full. Anyways, guys, I'll leave links in the description below so you guys can check out all these different websites. Thanks for tuning in, guys. We'll be making more videos on Synthetix as well as some other DeFi platforms. So make sure you guys subscribe to the channel. We'll see you guys in the next one.